Hi, everyone, and welcome to the special simulcast, the Neil Haley Show, and the Cutting Edge Benefits podcast by ClaimLinx. And today, instead of Tom Quigley, we have Anthony McMahon of ClaimLinx on the show. Anthony, thanks for stopping by. Our topic today is alternative group insurances, where you think you're going to save money, but really the savings hurts employees. Anthony, thanks for stopping by.
Yeah, no, thanks for having me. Big chair to sit in, filling in for Tom, but hopefully I could, stand up to the task.
So let's talk about, first of all, the whole thing of you talked about alternative group insurance. These are the ones that do lower costs, but they don't really benefit the employee at all.
Yeah, so I mean, everybody knows that health insurance costs are out of control. It's been a hot topic across, Washington and Congress, government shutting down, people protesting, even crazier things than that as well. From what we've seen this year, what agents and brokers that aren't able to retain their cases are now turning to save face with clients or promoting these ICHRAs. The thing with ICHRAs that people don't realize is that it might work out for the business saving money, but what does the employee get on the other end? So just for context on what an ICHRA is, it's a individual health reimbursement arrangement. But basically, how it works is that the employer is saying, hey, you're going to go out and get your own individual policy, and we're going to give you X amount of dollars per month towards that. Typically, what in reality ends up happening is, the group that was paying, X amount per month and giving their employees a gold or silver level type benefit with low deductibles, which was a good benefit, even though it was extremely expensive. Now, instead, what they're doing is they're saying, hey, employee, we're going to give you $300 a month to go get your own health insurance. And what ends up happening is that employee gets 300 bucks, 400 bucks, whatever the case is. They go out in the marketplace, they see the price of these plans, and they end up getting a catastrophic bronze plan just so that their out-of-pocket cost is not that high. And then result is the employee now has way worse benefits. Maybe they had a gold plan before with a $2,000 deductible. Maybe they're now getting plans with $7,000 deductibles, so they're on the hook for the first $7,000 of claims, and their employer now no longer has to, fund hundreds or thousands of dollars, per month or per year for that employee. So in terms of an employer standpoint, it's a great deal. You don't have to, pay for group health insurance for that employee anymore, but on the employee's end, it sucks. You get a way worse policy. You're getting, a minimal amount of money contributed to that every single month. But it's like the hottest thing right now in the market because a lot of these group brokers, the renewals that are coming back are horrific and they're not able to retain the groups on those plans.
So they sell them an ICHRA then instead.
Yep, exactly.
So what kind of companies are you seeing doing this?
All types. It doesn't really matter what industry, it doesn't really matter what location. I think it's been a very hot product this year because the alternative of traditional group insurance that these companies have had in place previously is just no longer affordable for them. And it hasn't been affordable for a while, but I think this year it really kind of broke the camel's back. And now they're, turning to all of these alternative strategies that, you know, will save the company money, but it's not apples to apples. It's apples to oranges where they're saving money, but they're providing a much worse benefit to their employees. And, I've heard it's hurt with retention, recruitment, just overall, satisfaction from an employee benefit standpoint. And it doesn't have to be that way.
And let's just say you got an ICHRA, you're saving the money, but you're still paying a lot, right? The
Yeah.
company?
Well, so the company, I mean, they stick like a specific fixed contribution amount. So they'll say, hey, if you go on one of these plans, we'll give you X dollars per month that you can apply towards your, health insurance premium. I've heard 300, 400. It's really up to the company of how much they provide. But it's usually a fixed amount. So the liability from the business's standpoint is capped, and they no longer have to deal with year-over-year rate increases because it's no longer a group policy. These employees are getting individual specific policies, and the employer is just paying a piece of that.
Interesting. And but they end up paying, but they're paying for more than that. So they're saving. What is their savings like? The employee. How much does they save? I mean, how much does the employer save when they do this?
Well, I mean, it depends where they're starting from. I mean, if you're, a small business nowadays, before they're coming to us and we're setting them up, I mean, I'm seeing a lot of groups paying, seven, eight, 900, $1,000 per, single employee. It's insane. Our groups, they're paying two, 300 an employee, but a lot of these small employers that are setting the group health insurance up in the wrong way, they're paying 700, 800, 900, $1,000 a month on that premium. They're cost sharing in some form or fashion, but it's definitely higher than the three or 400 that they're giving to the employees for buying those ICHRAs. So at the end of the day, the employer will save money by allowing their people to get ICHRAs, but it's a bad deal for the employees. And at the end of the day, if you hurt your employees, it's going to end up coming back to bite you in the form of recruitment and retention. If that employee can go to a different company and get a full-fledged health insurance plan, super affordable, but it has a $2,000 deductible instead of going on the marketplace and getting a bronze plan, it's going to be night and day. So that employee now is on the hook in this new ICHRA setup for the first whatever $7,000, $8,000, $9,000 in medical claims, and they have a bad policy.
Okay. And the savings is not because you're not retaining employees, you're not providing good benefits, and you're not as attractive anymore in the job market to keep your employees and all that stuff. Got it.
Yeah, I
What,
would
what
personally never work for a company that offered an ICHRA. I mean,
okay.
I think it's a way to cheap out, in my opinion. But
Okay. All right. What other types of alternative groups insurance are you seeing?
Um, I mean, they're all different forms of that, them, the employer saying, hey, we're going to give you a certain dollar amount, go out and get your own coverage, work with the agent. So it all kind of is in that same realm, same manner. Some companies are turning to self-insurance, which in my opinion is a horrible idea as well, because you're taking on way too much risk at that point. So, they're saying, hey, this group policy premium is ridiculous. We just got a 20 or 30% increase for paying, whatever, $1,000 per employee, $3,000 per family. We can't pay this anymore. So we're going to say, let's scratch, group health insurance entirely and let's just self-fund it. It sounds good on paper when you don't have to pay those premiums anymore, but when a shock claim comes through and it's $250,000, then it's not as fun. So that's why, we put a lot of thought into our solution. We want the best of both worlds for our clients. We want them to be protected against the large claims, but not overpay for the smaller day-to-day stuff. So, I'm sure Tom said it on here a million times, but at the end of the day, all that these groups and their employees should be doing is financing the catastrophic coverage. Get the highest deductible, lowest cost plan with a network in place that the employees need. Typically, it's a PPO. Once you have that in place, use the MERP underneath to give them a gold level type benefit, low deductibles, low copays, simplify it so that it's easy to understand. And then the company will self-finance the difference with the premium savings. It's really straightforward. I don't know why every company does not do it. They're all waking up to it now, and we're, bringing on more and more and more, which is great. But I just hate to see these companies and these employees have to deal with this for no good reason.
Yeah, exactly. And no good, that is a great point you said about no good reason. And why, what's the purpose of doing something? And look at this and those ways. So the other ones are similar to an ICHRA, or you're seeing other types of plans out there, any other types that you've watched out, let the employer be aware.
ICHRAs have been the main. There's all, different types of alternative acronyms and all this stuff. I don't even keep up with most of it. I just really wanted to focus on ICHRAs because that's kind of what I see a lot of brokers and agents promoting, what a lot of groups are now turning to and highlighting of like, oh, we found the magic solution. We saved, X amount or Y%. We now have an ICHRA in place for our employees. But if they actually dig in and end up looking at the policies that their employees now have, at the end of the day, I think a lot of their HR teams would be mortified.
And
Um,
how much savings do they provide if an employer purchases an ICHRA?
I
How much
mean,
savings it ends up being?
well, I mean, say a group's paying right now $1,000, per employee on the group plan, and then they cancel the group plan, and now they're giving the employee $300 a month to go buy their own policy. They're probably pocketing, five, six, $700 a month per employee that they no longer have to pay. Um,
But you could end up still saving them more.
yeah, that's the thing. It's completely. That's why I said no good reason. It's completely unnecessary.
So then they can explain that because that's where you talk about the better benefits. Explain that more to people to understand that if that you pick an ICHRA versus you and how it's going to be better and you're going to save the same or more, right? Even more potentially.
Yeah.
Easily.
if every group that we work with, if they cost share with the employees, they pay X%, they pick up Y dollar amount. If they cost share with the employees, if they implement our solution, the business is obviously going to save money. The employees are going to get the same or better benefits with the same network that they're accustomed to, so they can go to the same hospital, same doctors, have the same deductibles, the same copays, everything. We're going to mirror it up or improve it. And as a byproduct of procuring the insurance for less, the employees are going to end up saving money as well. They're going to have less money taken out of their paycheck through payroll deductions to cost share for the insurance. So if we're able to procure the insurance for 50% less and the company and the employee are splitting the premium 50-50, the employer is going to hold 50% of the savings and the employee is going to hold 50% of the savings in the form of more money in their paycheck. So every group that we work with, I always tell them, if you're cost sharing, these are the three goals that we should achieve. Number one, save your business money, make you guys more profit. That's always the goal. Number two, which is equally as important, maintain and improve the benefits for your employees so that you can retain, recruit, they're happy, and you guys feel great about it. And number three is a byproduct. I'm sure, everybody deals with it. Everybody's family deals with it. They're all like, I can't believe how much I pay for my insurance or my paycheck. And that third point is like, hey, if we're able to buy this for less for everybody and you're cost sharing, the employees are going to end up having more money in their paycheck with either the same or better benefits instead of you guys scratching the plan entirely, giving them a certain dollar amount to go buy an ICHRA. We're saying, hey, let's not throw what's the saying? Don't throw the baby with the bathwater or whatever.
Yeah.
So instead of doing that, let's just buy the insurance in a more effective manner, buy the high deductible with the PPO, cut the premiums by 50%, use the MERP underneath to give the gold level type benefit, finance the difference, and call it a
And you're going to also retain your employees and your business will be worth
day.
more when you sell it.
Exactly.
So all those different things. All right. So go to claimlinx.com to schedule a call with Anthony today. Really interesting, Anthony. I have to really think about this further, but you really explained the ICHRA, how it's really icky for sure.
Yeah. ICHRAs are icky. I think that'll stick.
All right. That was the special simulcast, Neil Hay Show, and the Cutting Edge Benefits Podcast, guys. Take care.